Call the meeting to order, and we'll start with a pledge of allegiance. I pledge
Allegiance
allegiance
to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Thank you very much. Roll call right now, we have 4, we're expecting George, but we've
George
got
just came to the door.
2 that are out.
And we have Paul.
So the second one down, is that Megan?
Yes,
So it's good.
It's George. We knew it was you.
I know, but Megan has identified herself as being that.
But you can't make her a participant?
She is a participant.
Either seat.
She's a panelist.
She's under
She
panelist.
She just can't come in
Oh, okay.
She's
with
right
video.
there where it says 203, dot,
She's-
dot, dot,
She's
45.
in by phone, that's all.
Okay.
So George, I'll give you a second to pull yourself together, and then we'll move on to the minutes. Okay, so we have 3, I don't believe we have minutes for a meeting of 2/7, so
Yes.
2/7?
Yeah, that's the police commission. I didn't do those minutes, but I sent them out.
No, that would have been 1/7.
We got January, so
Or 1/7?
Yeah.
Okay.
what's that?
1/7.
I was saying for the right.
Okay, so we'll take
It's on
these.
vacation, gee.
We'll take these listed. Minutes for January 21st, 2025, they've been distributed. I'll take a motion for approval.
So moved.
Is there a second?
Second.
Are there any changes? Any recommended changes? Hearing none, all in favor, please say aye.
All right.
Aye.
Thank you. For January 25th, 2025, they've been distributed. I'll take a motion for their approval.
So moved.
Second.
Moved and seconded. Any changes, modifications? Hearing none, all in favor, please say aye.
All right.
Aye.
All right.
Aye.
January 28th. Distributed earlier, and take a motion for their approval.
So moved.
For a second,
Second.
any changes, modifications? All in favor, please say aye.
All right.
Finally,
Aye.
instead of 2/7, we will go to 1/7, which was our special meeting that we had with the police commission, and a presentation by the chief and the Department of Police Services budget. So they were distributed quite a while ago, but if I will take a motion for their approval.
So moved.
Is there a second?
Second.
And a second? All in favor, please say aye.
All right.
Any opposed?
Aye.
Thank you all very much. Public comment, we do have 1, 2, 3. Janet, it is public comment time. If you'd like to comment, this would be a time to raise your hand and we will make that happen. Otherwise, we will continue with the meeting.
I think Janet might be on for the audit. Janet works in town hall. So.
Oh, okay, good enough. We will continue. It is time.
Just want to comment. I mean, I just want to acknowledge, I mean, Jerry does a really nice job with these minutes. And so I just want to say that. I mean, these are a lot of tremendous things to take note of.
I'll second that.
Yeah. Very nice. Yeah, we had a lot of back-to-back meetings.
Yeah, the month of January was quite busy.
Thank you very much.
So I have to admit, March looks like we may be in the same place, but we'll get there in a few minutes. All right, we will move on to the auditor's presentation. And Leanne, why don't I turn it over to you to kick us off, and then we'll take it from there.
Okay, good evening, everyone. I would like to introduce our auditors from Mahoney Sable. The managing partner is Mike Van Deventer, and the person that we work with is Samantha Thomas for our audit. And I am, at this point, I will just turn the floor over to both of them to give the presentation. I believe, I hope that everyone received 4 pieces of information from them: the audit, the state and federal audit, their presentation, and then their communications. That should all have been passed out to you. So Mike and Samantha, the floor is yours.
Thank you very much, Leanne. Again, my name is Mike Van Deventer. I'm a partner at Mahoney Sable, ultimately responsible for overseeing the audit work and issuing the reports on behalf of the firm. Again, joining me this evening is Samantha Thomas. Sam is the senior manager at the firm, really responsible for the day-to-day execution of our audit procedures. So as Leanne has mentioned, you should have received several reports that were issued in connection with the audit. This evening, I'm going to go through our presentation, which really covers the scope of work. I'll provide some overall highlights. I'll make our required communications, and then I'll certainly happy to answer any questions that the board members may have. So with that, I'm going to share my screen and pull up the presentation. All right. Turning to slide 2, as far as the scope of work, again, no changes from what's been performed in prior years. We did do an audit of the town's financial statements in accordance with both the auditing standards issued by the American Institute of Certified Public Accountants, as well as the government auditing standards issued by the Government Accountability Office. In addition, based on the level of federal and state funding that was received and expended by the town, we did perform both federal and state single audits. We also perform an agreed upon procedures engagement on the end of school year reports that are filed by the school district with the State of Connecticut Department of Education. In addition to those test services, we do perform some non-audit services for the town. So we do assist in the preparation of the financial statements, the schedule of expenditures of federal awards and state financial assistance, as well as the related notes. We also assist in converting the town's governmental fund financial statements to the government-wide financial statements. In order for us to be able to perform those services and remain independent of the town, management is required to oversee those services and ultimately accept responsibility for those statements. And again, Leanne is the finance director, ultimately accepted responsibility for those services. In connection with the audit, we do issue a number of reports. The report on the financial statements, we did issue unmodified clean opinions. Again, an unmodified opinion is expressed when we've concluded that the financial statements are fairly presented in all material respects in accordance with accounting principles generally accepted in the United States of America, and that is as established by the Governmental Accounting Standards Board. I do like to point out, if you read this opinion in detail, we do provide reasonable assurance that the financial statements are free from a material misstatement, whether due to error or fraud. So again, we're not providing absolute assurance. We do not test every transaction. We do utilize sampling in our audit methodology. The financial statements do include some significant estimates, and therefore we cannot provide absolute assurance. But again, reasonable assurance is still a very high level of assurance. In addition to the report on the financial statements, we also issue a report on compliance and on internal control over financial reporting. In this report, we don't actually express an opinion on the town's compliance with laws and regulations or on the effectiveness of the town's internal controls. Essentially, during the course of performing the audit on the financial statements, if we become aware of a material non-compliance with laws and regulations, or an internal control deficiency that we consider to be a significant deficiency or material weakness, we are required to include it in this report. And again, we did not report any such matters. In connection with the federal single audit, we issue a report on compliance and on internal control at the federal award level. In this report, we do actually express an opinion on the town's compliance with your major federal programs. For fiscal year 2024, the total federal awards that were expended by the town was approximately $1.1 million. The coronavirus state and local recovery funds was the major program. We did issue unmodified opinions on compliance over those programs, and we did not report any internal control deficiencies over grant compliance. We issue a similar report in connection with the state single audit. For fiscal year 2024, the total state financial assistance that was expended by the town was approximately $2 million. Of that, approximately 1.5 million was considered non-exempt and subject to the compliance testing. The major programs were the Urban Action Grant, Town Aid Road Grant, and your tiered payment in lieu of taxes. Again, we did issue unmodified opinions on compliance over those programs, and we did not report any internal control deficiencies over grant compliance. So again, from a reporting perspective, it was clean from an audit reporting.
Mike, can I pause you for a second there?
Yep.
So on the federal single audit, were you taking the ARPA funds into account as part of that audit, or is there a separate activity specific to ARPA?
Yep. So for fiscal year 2024, the ARPA funds, it is referred to as the Coronavirus State and Local Recovery Funds. So that was the major program that was tested for fiscal year 24.
Well, I thought those were the funds relative to the emergency services and stuff like that. Okay. Got it.
Good question. All right, moving on to the financial highlights. And again, the financial statements include a number of statements on different bases of accounting. Certainly to the extent we identified any concerns from a financial perspective, we would include it in these overall financial highlights. This first slide goes over your general fund budgetary highlights. Again, your original and final budget did not provide for the use of fund balance to balance your revenues and expenditures. Your actual budgetary surplus for fiscal year 2024 was approximately 4.6 million, of which approximately 4.4 million was subsequently transferred to other funds for authorized purposes. This resulted in an overall net change in fund balance on a budgetary basis of about 184,000. Again, your revenues were approximately 2.8 million more than budgeted, with favorable collections on property taxes, state aid, building permits, and interest income. And then overall expenditures were approximately 1.7 million less than budgeted. And again, no instances of budgetary noncompliance were identified in connection with our test work.
And that's both the general government budget as well as the Board of Education budget, right?
Correct. Yep. Next slide goes over your governmental fund financial highlights. So this includes your general fund on a GAAP basis, as well as all of your special revenue and capital project funds. Your combined ending fund balances totaled approximately 26.1 million. That was an increase of about 4.3 million from the prior year. Of the 26.1 million, approximately 9.5 million was in your general fund. Of the 9.5 million, 8.7 million was considered unassigned, and that represents approximately 16.9%, or just about 2 months of your fiscal year 2025 budgetary expenditure appropriations. So that is right in line with the recommendation from the GFOA. In terms of your capital projects fund, that had an ending fund balance of about 7.7 million. That was an increase of about 2.9 million from the prior year. Really, again, driven by transfers in from the general fund. Your capital non-recurring fund had an ending fund balance of about 5.7 million. That was an increase of about 500,000 from the prior year. And then all of your other funds had an ending fund balance of about 3 million, which was an increase of about 356,000 from the prior year. Again, if you go through the financial statements, you will see detailed balance sheets and changes in fund balance for each of your individual governmental funds. And again, no fund deficits were reported as of year end. Next slide goes over your government-wide financial highlights. And again, this includes your governmental fund financial statements converted to the full accrual basis of accounting. So it does report all of your capital assets, your infrastructure, as well as any long-term debt. The focus on the government-wide financial statements from a user's perspective is on your long-term liabilities. In terms of your net pension liability, that totaled approximately 4.8 million, which was a decrease of about 1.5 million from the prior year. And again, that was really driven by favorable market gains on your plan assets. The net pension liability for the fire department plan totaled approximately 1.3 million. Again, a decrease of about 49,000 from the prior year. And then overall, the town also reports another post-employment benefit liability. Again, that reflects retiree healthcare benefits for eligible employees. That is currently funded on a pay-as-you-go basis. The actuarial liability for those benefits totaled approximately 7.9 million, which was a decrease of about 323,000 from the prior year. And again, that overall decrease really reflected an increase in the discount rate associated with the municipal bond index. And then the last section just kind of goes over our required communications. Again, I'll open it up to any questions that you may have regarding any of the financial information or our communications at the end of the presentation. The first item here talks about our responsibility under our auditing standards. Again, although we assist in the preparation of the financial statements, they are the responsibility of the town. It's our responsibility to perform our audit procedures and express our opinions on those financial statements. In terms of the plan, scope, and timing of the audit, again, there were no changes to the overall scope of work or the timing of the audit that was originally agreed upon. And all reports were filed with the Office of Policy and Management by the 12/31 statutory deadline. In terms of significant audit findings, one of the items we will usually communicate here is if there were any new accounting standards that had a significant impact on the financial statements. Again, there were no new accounting standards implemented by the town that did have an effect on the financial statements for fiscal year 2024. As I mentioned before, the financial statements do include some significant estimates and judgments. Those consist of estimated useful lives that are assigned to the capital assets, as well as discount rates that are utilized to determine net pension and OPEB liabilities. And again, we did review those estimates. We did deem them to be reasonable and consistent with what other municipalities are utilizing. I'm happy to report that there were no difficulties encountered in performing the audit. Everything that was requested during the audit process was provided in a timely manner. There were no uncorrected misstatements. So again, any audit adjustments that were identified would have been proposed to management and reflected in the financial statements. We had no disagreements with management. We did obtain a management representation letter. Again, there were no unusual representations that we requested from management. I just give the board the example. If we were testing a transaction and we were unable to substantiate the transaction and we were relying on a representation from management, we would communicate that to you. And again, we're not aware of any consultations by management with any other independent accountants. If we were, again, we would have to communicate the reason for that consultation. So with that covers the entire presentation. Again, happy to answer any questions that any of the board members may have.
All right, let's start with questions. Questions here in the room? Rich?
I'm sorry, I forgot your name. Mike, thank you very much. You did a very nice job. So I listened to your presentation last year, and this year you provided a lot more information here. And so I was wondering if I could ask a question about the financial statements booklet that you have prepared, or is that something I should be taking up with Leanne at some other time?
Certainly, it's the question. If it's something that Leanne should answer, I will kick it over to Leanne.
I mean, essentially, if you can go to page 6, and that may be easier. So this is the financial statement. This is the rather hefty book that goes through all the pensions and so on. But I think the beginning part had a really nice summary. And so page 6, the bottom part, you had this description about a net position. And I've never seen this before, but I appreciate that. But essentially, you came up with a comparison of capital assets for 2023 at 101 million, and for 2024, a decrease of about $1 million to 99.9, maybe essentially 100 million. And so I'm just trying to understand what is defined as the capital assets. A few pages later, you break that down further into what the capital assets are, and half of that is related to building improvement. That's almost like $50,000, $45 million. Right, and so I'm trying to understand what that encompasses, right? I mean, certainly we did not put in $45 million in capital building improvements, But on the other hand, I would like to think that the value of all the buildings is worth more than 45 million. So I'm a little bit lost in what these numbers are, what that 100 million comes from.
Okay, it's a good question. I don't have them right in front of me to see the actual detail, but the capital assets themselves on the balance sheet are reflected at the carrying value from an accounting perspective. And so again, a lot of the buildings would have been put on the books a long time ago. And so they would have been discounted from a monetary value. And then in addition to that, you recognize depreciation expense each year on those assets. So again, that's really the net book value that you're recognizing for your overall building and improvements. Again, every year when you make improvements to your buildings, those will get picked up at the cost that you incurred. And then again, it gets depreciated over a period of time and estimated useful life assigned to those assets.
Okay, I mean, I guess I'm just surprised how low that number is, but I understand what you're saying, and I appreciate that. Thank you. I'm just stunned by the number of buildings that we have. Like, I would think that our 3 schools together is probably worth more than $100 million, right? But
yeah, so they certainly probably were when they were initially put on the books. But again, they're depreciated over a period of time where that value gets expended each year. And so that number represents your net value. There is a disclosure in the notes to the financial statements on the capital assets that actually show the gross amount of those building and improvements.
It's on page 38
On
of the
page-
financials. 38. And that description said building improvements in the MD&A. It should say buildings and improvements, so that is a typo. So those do include your building values.
I see. Thank you. Right.
Okay, other questions?
The only other thing I would make mention of is when the accounting standards required municipalities to put capital assets on their financial statements, they only had you go back to a certain period of time. So anything that may have existed prior to, I think it was 1980, would not be reflected in the capital asset value that's being reported in the financial statements.
Right.
So a couple of our schools are probably 50+ years old. So they wouldn't be reflected at all?
No,
They
they
would not-
probably they might have gotten picked up, but you'd have to look at the detail of the listing.
Yeah.
Schools are there.
Okay. Eric or Megan, would either of you have questions? Go for Eric.
I'm all set, thank you.
George, any other questions?
I'm good. I do have one more. So I appreciate it, if I don't mind, I appreciate you putting in the school pension in there, but realizing that the school pension is just in there for information purposes, but the TRB is actually paid for by the employees and the state. But there are school employees which are not part of the TRB. Are they picked up, essentially, are they basically just part of the town's pension numbers?
Yes.
Thank you very much. Thank you.
Okay, I have a couple of questions. One is, always trying to figure out the ups and downs. If you go back to page 8 of the presentation, Mike, on the, on the financial highlights, when we're talking about the net pension liabilities, there was a decrease of 1.5 million in the town plan. What was explain to me what the driver of that was?
So the driver of that is really the market gains on your plan assets. So the net pension liability reflects the actuarial determined liability for the plan, less your assets that are held in trust. So again, if those assets have appreciated in value, it will have a positive effect on your overall net pension liability.
So for this fiscal year, you're saying they depreciated in value?
The assets appreciated, which you deduct that from the liabilities. So because the assets are higher, it results in a lower net pension liability.
Mike, can I say something real quick?
Yep.
If you go to page 47 of the financial statements, you'll see the ins and the outs of the drivers of the net pension
27.
liability.
27,
47.
47, thank you.
And that's your town plan and your fire plan. The first column is your liability. The second column is the asset, your investments. So you had a $2.8 million net investment income, which increased your investments, therefore decreasing your net pension liability.
Got it. Okay, yeah, I understand that better now. Thank you.
Yep.
Secondly, is the Board of Ed a separate audit, or are they audited as part of this?
Yep, they are included as part of the town. They're primarily included in your general fund as part of your operating budget. And then they also have other funds, which consist of grant funds, student activity funds. Those are all reported as separate funds in the financial statements and are subject to the audit.
Yeah, and then do you meet with the Board of Ed to talk about those specifics, or is this kind of the one time that you're meeting with town folks?
That's correct. We make our communications to the Board of Finance.
Okay. All right, those are my questions. Any other questions? Ian, are we in a position where we need to move and accept the report, or do we just thank Mike and Sam and move on?
So we thank Mike and Sam. I have already reviewed the report just so everybody understands what happened. And then they upload it to OPM, and I'm not sure if there was some other when you did the federal and state where that one went, but they upload it and then I approve it. So it's all signed, sealed, and delivered. And this is a reporting requirement to the Board of Finance, as I just mentioned. And did I say that correctly about how you upload the reports, or is there anything you wanted to add about that comment?
We upload the report to the State Office of Policy and Management to comply with your statutory requirements. And then we also assist in filing with the federal clearinghouse, audit clearinghouse.
And those have due dates that we had to do it by certain dates.
Correct. Yep.
Got it. All right. Mike and Sam, thank you very much. Really appreciate it. Oh, George.
I also just want to, at this point, thank you both for very extensive work, but also really thank Leanne. It sounded like she was a huge partner in this and making this work. And so, and your final reports in terms of how smoothly things went, I'm sure is a testament to Leanne's participation. So thank you, Leanne.
No doubt about that.
Well said. Thank you.
Thank you, George.
Okay, we will move on. Madam
Thank you
Treasurer.
very much.
Thank you.
Good to have you excused.
Mike, you can stay as long as you want. And that was it.
Off he goes. Wild wilderness. All righty, guys. Okay. That was quicker than I expected.
There you go, you see?
Good.
We're an efficient group here.
Aren't we though? Very nice. Okay, so we will start with our executive summary as of January 31st, 2025. So fiscal year to date, the town has received revenue of $50,333,042, or 97.8% of the total amount of $51,440,042 budgeted for fiscal year 25. When comparing our performance to last fiscal year, we are 0.5% ahead of this time last year. And we'll move down to the authorized investment section. Ding.
All right.
As of the end of January, the town had 46.6 million in its bank accounts. In the last month, the stiff rate has moved slightly to 4.55%, And today it is at 4.43%. And Webster, as you know, gives us the stiff rate in arrears, and their rate last month was 4.76%. We have decided to give you a 2-month historical look back on our investment rates, which you can see is why your sheet looks a little different today. So you will have more information in this area. So hopefully you'll enjoy seeing that. It'll give you a little bit more history and a better perspective on that. So you guys have any questions there? Yes, Johnny?
I mean, this is just, I'm very pleased with stunned, right? I'm surprised that you guys can still get 4.5% interest rates on your money.
Well, that's stiff in the state of Connecticut. I mean, it's funny, like, so ironically, in December, I reported that the stiff daily rate was 4.43, yet when you did the cumulative rate for, it came out to 4.55 for January, still. I mean, so it's just like the daily rate might be this, but then you go for the whole month, and so it's, you know.
The rates did go up.
Huh?
The rates did go up in January.
They went up a little, yeah, it was a good market.
Yeah.
Yeah.
And your perspective.
Yeah.
Short-term investment fund is a money market fund, and it has locked in some longer-term rates. So when interest rates fall, it tends to lag a little bit on the higher side. So it will come down. It will come down.
Yeah.
Thank you.
So, and what's really nice is Leon has created this nice deal with Webster Bank where we get that stiff rate in arrears, so we're always doing very well with Webster Bank.
Well, it's good on the way down.
Yeah.
It's always good on the way down. So, then on January 31st, we had a bond come due and we reinvested it towards our interest income goal for fiscal year 26, which our interest income goal for fiscal year 26 is $690,000. So we purchased $2.25 million at an interest rate of 4.238%, which will mature on October 31 of 25, with a projected revenue of $68,027, bringing our total revenue after this purchase in January 31 to $209,459 for fiscal year 26 interest income so far for January 31. We will discuss more because we did just purchase a bond in February, but you'll get that next month. Okay? Any questions there? Okay, I'll keep it. And then we'll move to the pension plan. At the end of January, we received our report from Morgan Stanley. And the town pension plan is up 6.30% fiscal year to date versus its benchmark of 7.01%. Over the 3-year horizon, the town plan has returned 3.99% versus its benchmark of 5.56%. Then the fire department pension plan is up 6.30% fiscal year to date and has returned 4.34% over the 3-year horizon versus its benchmark of 5.56%. So it had a good month in January. So all monies belonging to the town as of January 31, total cash balances were 46.6 million. Pension balances were 30 million for total assets under management of 76.6 million. And then we'll move to page 2 of the treasurer's report. So tax revenues were $14,988,813 for the month of January, bringing the fiscal year to date total to $47,838,910, or 96.9% of the amount budgeted for fiscal year 25. And then you'll see in the state of Connecticut area, we had our second payment of ECS payment, $32,000. And we received our second and final town aid road grant as well, $124,000. Any questions there?
We're lagging a little bit with the state. So if I should be concerned yet or not.
Will we contact them at some point?
No, I mean, ECS will come in, that's a lock. So we'll see what else comes in.
So in terms of local revenues, the town collected $230,688 locally, for a total of $15,377,283. Local revenues for a total of $50,333,041, or 97.8% of our fiscal year 25 budget. So we have exceeded our budget on our interest income, building permits, golf fees, and the Vicky Duffy Pavilion over 100% of the fiscal year 25 budgeted amounts. And that's all I have.
Thank you. Can I ask a couple of questions on, in this local revenue area, where we've got three different lines, one being interest and dividends, one being interest, and one being realized gains, and I'm not quite sure what the ST gains are. But can you just tell me what I understand interest, but where's the interest and dividend coming from, and where are the realized gains coming from? Why is that all separated out?
May I answer that for you, Mr. Chairman?
That would be wonderful.
Okay, so interest is what we earn at Webster Bank. It's just interest on our balances there. And interest and dividends and realized short-term gains are on our town cash. And that separates. So when we have bonds outstanding, we take that interest in, they pay a coupon, and that becomes interest and dividends. And then because we're buying a lot of these bonds, they're treasury bills, we're buying them at a discount. When they mature, we have the accretion is a gain. So we are just booking them separate to keep the programs separate, so that when the auditors come in, they can easily say, okay, this is the Webster funds. These are what we have in treasury bills and bonds, and we do it as a means to keep those in two separate buckets. But I'm sure as far as you're concerned, it's all interest income from our investment programs.
Right, and then I carry that back into a budget line of 600,000. So
Right.
you've got the combination of 768,000, 117,000, and 259,000. So we're significantly above.
Yes.
Right, correct.
Interesting.
To be discussed when we talk about the next budget.
Yeah.
Okay, other questions, George?
I mean, just, so essentially the same question, but just following up then. So when you were describing the $260,000 gain from that bond that you had described, essentially that is the 1, 2, 3, the sixth line item then in.
Well, sometimes it's broken up, as Leanne was saying, into different lines.
But
Depends on where she puts it.
But I think that would also show up in fiscal year 26. What
Oh,
the
the
treasurer was
bonds
just talking about
bonds that
is
we're
going to show
buying
up in
today.
26.
Well, sometimes, if we're buying a bond today, it matures and we're seeing a gain today in fiscal year 25, and then we purchase it, and the next gain will be in 26. But you will get a coupon payment sometimes in this year still.
Okay.
So it's hard, it's very hard to say. We're trying to not, we purchased a bond on Valentine's Day. We tried hard, we have no coupon payment in 25, because we're trying to push it to 26. Play with these things.
I understand.
Yeah.
Okay. Eric or Megan, you all set? We'll move on to the finance director. Leanne.
Oh. All right, I don't have a lot for you tonight. I'm going to start with the ARPA. And we've had a few things get fully spent or spent down. One was the Kate, the humidifier. We've finally made that final payment. That's over and done with. Also, all of the road paving. I think I mentioned that last time that we paid the $500,000. And on the second page, the Himalaya restaurant, the 22,000 that has been fully paid out, and half of the HVAC for the Historical Society. So some of those first three things that are fully paid out are going to, next month, you're going to see them wrapped into the closed ARPA appropriations, and that line item is going to go up. And, you know, when these other things that are being paid out in portions are finally closed out, then we'll move them, but they'll stay on so you could see them until it's all done. So during January, ARPA expenditures increased by 35,000, with the HVA system being the largest chunk of that. So we have spent 1,633,203. It's almost half, a little more than half of all of our ARPA appropriations have actually gone out the door. And then we have not had any action items in the last couple of meetings, so I don't have anything to report there. And I'm turning to page 4 to talk about our cash flows at this point. Obviously, January was our tax month, so the general fund received activities where it increased by almost 11.5 million. We had 15.4 million coming in revenues, as the treasurer just reported, and we had 3.9 going out in expenditures. So January was a net plus for the general fund. In the capital funds, we were down 43,000. That was just one payment to PERF out of our capital funds that was made for that. And in our reserve funds, they were down almost 370,000. That was from the WPCA Fuss and O'Neill payment. We talked about those before. We're going to continue to see some of those paid on a regular basis. And then non-major funds are up 907,000. About once a year, we take from Morgan Stanley for our pension fund, we actually have to go to them and ask them to give us some money so that we can make our pension payments. The beginning of the fiscal year in July, when we get our employer contributions, we put that in. That carries us through about half the year. And then for the second half of the year, we have to get refreshed a little bit so that we have some money here at Webster when we cut our checks. So that was the major mover of the non-major funds. And then in all of our capital, we haven't had a lot of movement in any of those accounts, except for one fairly big one. Under the fire apparatus, we finally received our $500,000 for those radios. That was a reimbursable grant. You all saw that fund was negative for a long period of time, but we did receive the money. So now, happy to report we have a positive balance there. And that's it. I looked over the list of all of our line items for the budget, and everything is performing as expected. I don't have any comments or concerns, but I'm happy to answer any questions that you may have.
Good. Got your questions?
What's the 1308 for the new van for youth and family balance?
Where do you see that, Brad? I'm sorry.
Page 4, third line item up from the bottom. I'm sorry, second line item from the bottom. YFS.
Oh, yes. So, yes. So, as I mentioned at one of those budget meetings that we had, that Carl was able to get a really great deal for the youth and family van. So we had 45,000 set aside for it, and it came in, whatever the difference would be, 43,000 something.
61308. Oh no,
No.
we have a balance left over.
Has a
Okay.
balance.
Yeah. All right, good.
Yeah.
What happened to the old van?
Carl?
Well, I know Larry, all that old equipment, Larry is definitely putting that on gov.
You mean Bill?
What?
Bill?
Bill who?
Bill,
No,
oh, Larry, I'm sorry.
Larry.
I was thinking of Larry, the other
we'll
Larry.
auction it off
Oh, okay.
and get what he can. I don't think there was anyone that wanted it, so it'll get auctioned, or it already did, I'm not positive.
Now, somebody asked me why there were two vans over there. Is it still over there or something?
No, the old van is not there anymore,
Okay.
no.
They asked me why there's two vans.
There are two, they have two vehicles over there.
Yeah.
They had the big bus,
Yeah.
And then they had a van, now they have two vans,
Okay,
now they have two, not minivans, they're a little bigger than minivans.
stretch bands.
Other questions? Hearing none, thank you very much, Leanne. We will continue to move. We are on to the selectmen's presentation of the town budget.
Yep, so, it's not gonna be much of a presentation because this group, along with the Board of Selectmen, we've worked together to get here, so you're very familiar with the budget. I'll start with the fact that, the budget overall is up 3.3%. A total of about $1.7 million. Of that, the town portion of the government is up 361,000. So the schools had a pretty big increase this year, about 1.4, let's just call it 1.4. Between your last meeting and whenever, they said they needed, and I'll let the schools speak for themselves, a new admin position over at the Goodwood School. I guess they were down one person. So $250,000 was added to the Board of Ed budget between the first number we got and then the final number we got. Obviously, 250,000 is more than one person, so there's some other things in that. I'll let the superintendent explain for himself on that, but I was a little disappointed with that, to be honest with you, to see kind of a rather large increase come in late. But that's what it is, and it will be within the purview of the Board of Finance to discuss. But budget's up about 1.7. So.
Can I interrupt you for a second?
Yeah.
Go ahead. Are they, the board, school department coming back here again?
Yep, we've scheduled them for the March 18th,
Okay.
and we can talk about that in a minute. The, what's a mill at this point? What's a mill worth?
You know, I'll say $250,000, yeah, something like that. A tenth of a mil is about,
$250,000, yeah, I'm sorry. I thought you asked what the mill rate was being 16.20.
No, the value of a mill.
I think the value of a mil, you know, Bruce, that's kind of old information, but I'm gonna say it's,
Used to be 250.
yeah, 220 to 250 is a tenth of a mil. So,
Because what you're saying in reading this, reading to the end, you're talking about effectively a 4.4,
yeah, 0.42.
so that would be.
Yeah, so we'll call that $1 million and then, any growth in the grand list, any changes, so between revenues. Look, changes we made, so. You have the memo here, page 4, you see a reduction of recycling coordinator position, so. Originally, I put $2,500 in the public works budget, and I was going to start up a recycling coordinator as a stipend position, not really just a 1099 position. I thought maybe to drive some additional efficiencies and maybe reduce some of the tonnage. So I advertised it at like 10 grand, and in addition to the 2,500, we were gonna use the small bottle fee. And this is a perfect use, literally perfect use of the small bottle funds that we have. We have about 27,000 we receive in the bank right now, maybe a little less. We receive about 8,000 every 6 months in small bottle fees. I think that's my recollection. So I advertise the job and I get not a union grievance, but close to it, saying, we feel this is union work. Even though I think it's not union work. But honestly, for the amount that I was going to pay for this job, if I have to take it to the labor board at this point, it's gonna cost me $5,000 to drive a $10,000 a year position. I'm not ready to fight that battle at this point, maybe in a few months, but I just said, you know what, for now, we can always use a little more money in our tip fee because we know tip fees are going up for MSW, so we just transferred it into the MSW line item. With regard to the police department, there was savings on the workers' comp side of the ledger. And that is a budget that Leanne puts together for the PD. The police commission said, okay, so we have that money. And what they did is they looked at the police budget. And I was at the meeting where they asked the chief, hey, some of your line items look like they're underfunded. Maybe we should put that 27,000 or so into those line items and call it a day. The chief's response was, I asked for what I needed. So other than $5,000 or so, I think it was, I removed that money from the police department budget. I did increase the electricity by 5,000, but there were a couple other line items that the police commission, and you can go back and I could probably identify those for you. They stated that they were gonna try to maybe get them more into balance year over year, but the police chief didn't seem to want to lobby for that. So I'll take his word that he does not need that money in the budget. So I removed it from the budget, except for 5,000 on the electricity line item. And that's what you see there. And in the fire department, because we did a couple things on the firefighter pension plan every 10 years, and I've been through this twice now. I was about 2 or 3 years into my service for the town here. We increased the fire department pension, and now we are 10 years later, and we're doing it again. And so there was an increase in the actuarially required contribution to the firefighter plan. So the net effect of all those changes was about a negative 3,000. Couple other things we
What was
did,
driving that actuarial increase?
well, because we increased our benefits.
Okay,
Every 10 years, we take a look and we try to give them a kind of a 10-year COLA, essentially. And there were some officer incentives also. Okay. One other moving target in the budget was the probate court. And right now, the probate court is a bargain for all 9 towns. And I know you've heard about this a little bit, so I won't bore you too much with it. The probate judge said her space right now is not adequate. So we've had an architect come into town hall, and I've reported this to you, to take a look at reconfiguring where we are in the building and where they are in the building. However, in the interim, the judge said, that's Senator Norton Needleman speaking. But in the interim, in the budget, originally, I had put in an extra 24,000 into my, 14,000 actually. So we increased the probate court contribution from about 6,500 to somewhere around $20,000. And the cost to Old Saybrook, if the judge went out and actually got a new office in a private building, was gonna be more like 30,000. So I split it and I said, look, out of safety, let me put something in the budget. And if we need to cover the rest of it in the fiscal year, I'll come to the Board of Finance and ask them for that money, but I'm hopeful we can work something out. So as it turns out, I'm quite confident, and I'm going to receive either tomorrow or Thursday from Greg Nucci at Point One Architects, a layout of what it might look like up there. More importantly, a layout of where the judge's staff would sit to make sure they have enough room in what is now the conference room. No, the building official's office. That's where they all would be. So he's laying that out. We have to build a couple other things, not a huge expense. So I hope to get that tomorrow. I hope it satisfies the judge and we can keep her in town hall. So with that $14,000 that I had in the budget, because of the perf report, we've now had an HR need, probably identified that more than ever. I put $10,000 in political subdivisions towards HR. We use a lawyer at Rose Kaler named Robin Kaler, and Robin's helped us with a lot of our HR issues. What I did is I asked Robin, I said, is there a company that you would recommend for municipal assistance on HR? And she said, yes. And there's a group called McInnis, MACINNIS. They're out of Milford, but they do, I think, 5 or 6 towns. They do a lot of corporate too, but they're very familiar with municipal government. We have a proposal from them to do an audit. They're gonna look at a lot of our personnel files, interview our department heads, and get an idea as to where we are right now. This will not include the Board of Ed. This will only be on the town side. So we're gonna do the audit, and in anticipation of what might come out of that audit, I put this in the budget for next year as a budgeted line item, which is something we might build on in future years. Because to be honest with you, between Leanne, and a little bit on my end, maybe not as much as Leanne, I'll just give Leanne more credit. We piece together HR right now. That may not be the case in years ahead, I'll just say that. So it might be helpful to have a professional group that knows our town, is already hired by the town, that can help the town with HR issues moving forward. What do I anticipate that budget ultimately ending up being? Perhaps it could be anywhere from 25 to 60, I'd say. But I think if it went to 10 next year and maybe 30 the year after that, I think the town would be in a really good spot for what we need for HR at that time.
When will the audit that they're working on be done?
They're coming in on like March 4th or something to do the audit.
Okay.
So, they'll have a,
But it'll be done this fiscal
it
year.
will be done this fiscal year.
Okay, and you've got the funds to be able to.
Yes, we do, because Bridget had a lack of help in her office, so we'll pay for it out of our personnel line item. We had some people move around a little bit, so.
And so I don't understand why it's in political subdivisions.
It is for now, we just put it there, it doesn't have to be, okay?
I looked
No,
at
no,
that.
no, I think we just needed a spot, it was literally a last minute thing to the budget. We can create an HR department.
Or in the first selectman's office.
Yeah, whatever, well, that's not an issue, it's not there for any reason, good spot, but it's not there to, because we feel it should be there or anything like that.
Yeah.
So those were, and then, Matt Pugliese, brought forward at the last Board of Selectmen meeting, that he'd like to see the town contribute a little bit more to the Shoreline Soup Kitchen and Pantry. So we took the remainder of that 14,000 and we're recommending that it go to the Shoreline Soup Kitchen and Pantry. I've been not very involved with them, but I've tried to be as helpful as I can to them over the years. I actually, during COVID, rallied a lot of the other towns to get them their new refrigerated food truck. They do terrific work in our community, even though it's not just solely Old Saybrook community, but they do pretty good work, so I had no objection to that, so we put a little bit more money into the Shoreline Soup Kitchen and Pantry. He also brought forward a recommendation with regard to the estuary. It was a little bit bigger, it was about a $25,000 request, it is not in the budget. I think I need to meet with Stan over there at the estuary. It was more for rides to medical appointments. And I'd like to talk to Stan a little bit more and see if there's another way we can meet that need, either through, so the Vicky Duffy Pavilion gets a lot of use in this town, and a lot of times it's people call and it's already booked. The estuary has a lovely room over there. I don't know how many of you have been over there to the estuary. You been there?
No.
They have a room and they've done a ton of work on the outside. And they have this patio, it's handicap accessible, and they overlook a marsh. And they have a room that probably holds as many people as the Vicky Duffy Pavilion. So I've worked out with Ray and Stan over at the estuary, that maybe we can try to redirect some of our overflow there to generate some income for the estuary. We could advertise it, we could point people in that direction, but we wouldn't necessarily take a fee for it, we would let them collect the money. They charge $100 an hour, so we charge 65, I think, and he'd be willing to work with us on residents versus non-residents. It might have a double effect of also people like Bruce Carlson saying, wow, I didn't even know this was here. And you end up there one night and you're like, this is gorgeous. And it really is. They have a beautiful view. They see bald eagles, osprey nests, everything right out into the marsh. So kind of working on a few things, and we might be able to generate some revenue for them anyway. So on the revenue side of the budget, go ahead.
So, I mean, all that came from.
No, not on the estuary, nothing's in the
No, I
budget.
understand, but the conversation started with a $14,000 from the probate.
10,000 to human resources,
Right.
4,000 to shoreline supervision.
So rebuilding or reconfiguring that area for the probate judge court, how much is that gonna cost?
So, I don't know. I'm gonna hopefully get an estimated cost tomorrow from Greg. This is what needs to be done. We need to put a doorway between the building official's office and the conference room up there. So a doorway and a door. In what is currently the fire marshal's office, that will be the building official's office. When you walk in, we're gonna build a wall that has a counter. So people can come and have and deal with and then as you further go in, there's gonna be their door into their office. So a wall, a door, another door, that's essentially the reconfiguration. That's it. As to what it will cost, there are 9 towns. I've had conversations with the 9 towns. Every one of them is like, the amount of money we're saving them, they're willing to contribute to any. In fact, Clinton has been like, I'd rather invest in your town hall than have her go somewhere else. So.
Cause that could easily be 50,000.
I don't think it'll be 50. I think it's gonna be more like 25 or something. If you have to build, I'm going on the high side. I'm gonna say 25 on the high side,
But you divide that by 9, then you.
but I could easily get funding for that. Yeah.
It's a real benefit to the town.
Oh, absolutely. No, I was just in case.
And I think I said last time, it opens up that whole probate court space up there, which we would then be able to use maybe for another conference room, have conference room A and B. And then with the scanning project that we have doing, if we can empty out our file room, that could be an area where lawyers meet with their clients and we can have a kiosk. I mean, it really, the whole thing could change a lot upstairs in terms of space and how we use it. And I don't want to repeat myself on the program. They had some security issues. This buttons up their security issues too.
No, it's just, I was just trying to do math, because you said you should put in about 6,000 and they added 20,000, you had extra 14,000 back out, but now it makes sense.
But we're not using that money for the upgrade. Yeah, we're gonna, we'll probably use our town hall funding for that in the budget, but seek reimbursement.
Sure.
On the revenue side, I'll just be pretty quick here. We're not changing anything other than on the revenue side, we're suggesting that mini golf keep all their fees. And so basically, we're doubling the amount of money that goes into the strategic fund. And if you start talking $200,000 plus going into that fund, I can't imagine that mini golf isn't going to be reasonably self-sustaining almost with regard to some of their projects. I mean,
Parks and Rec,
what did I say?
mini golf.
Yeah, Parks and Recs. Between the $2 mini golf extra fee and 200,000 going in there every year. So what we did on our side is, because we anticipate about a total of $190,000 coming back to the town from mini golf, and we already had 100 coming back. We just assumed it was gonna be another 90, and we bumped our interest income up from 600 to 690,000, so the net effect is 0.
How much are the beach passes?
What's the value of them, or how much is it each?
I think the beach pass is like 20, and then for Harvey's Beach, 20 for town residents at our beach. And then for Harvey's Beach, I think it's 25 for a car during the week and maybe 50 on the weekend, something like that.
When was the last time they went up?
They went up not too long ago, I think,
To 20?
at Harvey's Beach. That's a question for Ray, I can ask.
No, the only reason I ask is other towns are getting like 40.
You know, it's all over the map. And I've seen this, and one of the reasons I've seen it is because of some of the lawsuits from out of towners with regard to town beaches. So, like in Westport, I think at Campo Beach, they were charging town residents like $25 and then for an out of towner, it was like $200, and they got into some trouble doing that, so.
I was talking more about in-town people.
Yeah,
20 is free.
I think it's, don't quote me, I'm pretty sure it's 20. Leanne, do you remember what it is for a beach pass in town?
I'm pretty sure it's 20.
Yeah, when you purchase it for the season, it's 20.
Yeah.
Because we buy two, it's 30. You get a discount when you buy two.
So, at the end of the day, I'm not unhappy, given the increase on the Board of Ed side, and let me just make a couple other comments. We're losing on the grand list with the motor vehicles this year because of the new methodology that the state implemented. And I'm telling you right now, at every cost Council of Small Towns meeting I'm on, and CCM meeting I'm on, towns are in crisis. They're losing significant money on the grand list with the car tax. And it's all relative to our towns, but we're losing it too. And that, otherwise, this would have been a budget that might have seen a 0.25 or something increase. But with the loss, we had about 20 million value on the grand list that we lost. Not only that, veterans tax exemption. This is another item that is hitting towns very hard. So right now, the way the statute was written, it was very loosey-goosey, and a lot of veterans took advantage of it. So I was on a phone call today with Council of Small Towns, and supposedly yesterday on President's Day, they went in to fix it. And they said, yeah, you have to be 100% disabled as a veteran, but what we're gonna do is we're going to increase it. It used to only include the house. Now they're including up to 2 acres. And also it can go to the spouse of the veteran once the spouse dies, and they want to extend it to Gold Star families. So, you gotta be careful what you say, right? I mean, veterans served our country, but this is in my opinion, a persistent theme at the state. Oh, we're gonna do something for you. We're gonna do something for you. We're gonna do something for you. It all ends up on the property tax. Every bit of it ends up in our pockets. And the state looks like the good guy. The governor stands up and says, I didn't raise taxes. And, partly because the Democrats probably would, the Republicans would make a big deal of it. So you'd have that political fight. And the governor kind of is in the middle, and he gets to say, I didn't raise taxes. But they eat away at local revenues every year. And when you look at the revenue sheet, you will see that all our revenues from the state are projected to be flat, actually down 10,000 is what we got this year. Our total revenues estimated by CCM are down about 10,000. They've been flat now probably for 5 or 6 years. Old Saybrook, fine, you can make our revenues flat. I'm happy to be held harmless. New London isn't. Stanford's not, New Haven's not, and Hartford's not. Between ECS and payment in lieu of taxes for state-owned property in a lot of those towns that are exempt, those payments are being held flat. And when you hold payments flat over the course of 5 to 8 years, you're losing revenue, is what you're doing. And the value of what we get now, that 525,000, 550,000, compared to what it was 5 years ago is less. That's not a political statement. That is a CCM cost statement. So we're not, there really was nothing done on special ed at the state level this year. I think they're putting $20 million more into it. I mean, it's a drop in the bucket. So I was on a CCM meeting last week and Joe DeLong was very blunt. He goes, this is a bad budget for municipalities. Mike Passero in New London was just like, I don't know what I'm gonna do this year, but I can't raise taxes. I don't know how I'm gonna do it, but I have to cut services because we're losing money every year. So Joe DeLong was very blunt. This is a bad budget for municipalities. We're better because we never got a lot. So if let's say we lost all $525,000 next year, we could probably build that into the mill rate, go to the public and explain it. A lot of other municipalities, and I'm talking about towns, not cities, can't afford to do that. Obviously, I'd love to get more state revenue, not less. But those are, and we do still have some revaluation cases from the 23 reval. I've been working with Bridget a little bit. I had a conversation with our attorney to try to get him to settle a few of those. But those are still active out there. The big ones are Saybrook Point Inn, the Cole Big Y Plaza, and CVS are, I think, three of the big reval cases that still exist. We're making a last-ditch effort to settle them before we start spending money on appraisals, which is the next step. And anyway, I'm trying to nudge our attorney along, give him some numbers to work with. That's about it. I won't go on any longer.
Okay, let me just, what I think we ought to plan on tonight is, if we have clarifying questions and those kinds of things, this would be good. And I'll just lay out for you what I think would be our schedule based on meeting with Board of Ed, meeting with the police department, police commission. So we're receiving this tonight. Thank you very much. And then at our March 4th meeting, we've invited the police department and police commission to meet with us. We can either do the treasurers and finance directors report that night, or we can also just spend the rest of that evening discussing any budget questions that we may have. March 11th is the public hearing on the budget. And so we obviously won't be taking any action prior to the public hearing. March 18th, we have invited and they have accepted the superintendent and Pam, as well as members of the Board of Education will be here. And we will see where we are at that point. I've been in communication with Leanne, and she says that if we vote on it as late as April 1, we're still okay.
Yeah.
And that allows her to do what magic needs to happen before ultimately doing the referendum and public meeting. So that would be the plan. So I use tonight as information gathering. We've got it. If anybody on the board wishes to ask any clarifying questions, this would be a good time to do that.
So I just want to ask Leanne. Leanne, do you want to add anything? I don't know if she had anything on the.
Well, Bruce and I had talked about this a little bit, so I think that we're good with the dates. We're probably going to have the financial reports on the 18th, if that's okay with you, because that's a little bit of a push to get them all ready for the 4th, given the week.
Okay, that's perfect.
Did you have anything on the budget, on the revenue side, or anything?
No, you covered everything really well. The revenues, all the caveats for that, and the changes in the budget. There really weren't that many changes, and this group has seen everything. So I feel pretty good that everybody should be comfortable. But obviously, if you're not, happy to answer any questions.
Okay, George.
So, I have several questions. So coming back to the state part, I was interested in terms of the state, you said right now we collect about $500,000 ish, right? But then if we basically draw that out to zero, we can manage, but there's a fair amount of unfunded mandate as well. I mean, your veterans are essentially what I consider unfunded mandate. In terms of what we have to pay, but we're not funded, right, for that. So there's a new initiative coming down, but we basically pay for that. So how much are we, I mean, clearly our unfunded mandate does it more than pay? Is it more than what we're getting from the state? Is it more than?
But the unfunded mandate, I mean, so there's like something like 1,000 unfunded mandates.
Right.
So I'll bet if you were to really add them up, I bet you're probably talking $1 million. I mean, you know, if you're talking a big number, $1 million, I bet you're talking several $1 million. In terms of what we must do, because you're talking about everything from handicap accessible when you rebuild to testing, constant testing at the transfer station for spilling, and I mean, it's just a whole ridiculous host of, I mean, not ridiculous.
I understand.
But a whole host of things, and it's millions, I would say.
So
But that's built in, that's just
yeah,
built in.
my
at this
point is,
point, right?
if we basically just says, we're gonna forget the state and basically just wipe out the 500,000, we could still be going down with new unfunded mandates coming out from the state.
Sure, I'm sorry.
Yeah, George saying that even if we didn't get the state money, we could still end up getting unfunded mandates, which did cost us
Even more.
above and beyond whatever state money. Right?
So one thing I said at the meeting today, at the cost board of directors meeting, I said, so right now at the legislature, it's crazy time, right? They just bill after bill after bill after bill after bill, and I don't even get that excited because so many of them aren't gonna gain traction, right? A lot of them won't come out of committee. And so we try to identify the bills that are gonna come out of committee and what we should really protest or work towards a resolution on. I testified today at the state capitol. You've heard me talk about it on the firefighter cancer presumption bill. We're trying to add a very small surcharge, 5 cents to everybody's telephone bill. That would add about $3 million a year into the firefighters cancer presumption fund, which has 7 million in it right now. There's 15 claims currently in that system. 15 claims could wipe out $7 million depending on the type of cancer, right? And how serious and significant the treatment is. And it's, I forgot where I was going with that, but it's crazy time up there. And I still forgot. I'm sorry about that.
Sorry.
Good story.
It's,
George,
it happens when you become social security eligible, I guess.
Oh, stop
Yeah,
it.
anyway.
So I have a clarifying question about the grand list, right? So, well, I'll start with this one. So right now, the grand list, you say that the grand list, this is on page 6, the grand list of October 2024 recognized an increase of assessed value of approximately 11 million. So,
Yeah.
and so I didn't think that property tax was assessed, property was assessed every year, but there was an assessment,
Nope, so every grand list can grow. So if you have home improvements,
I
or if
see,
you have new construction,
I see.
that hits the grand list and it can grow the grand list,
So it grew by 11 million.
okay?
No, I'm sorry, 11 million, but you're saying that the car went down 20 million. So without the car, the grand list on just property went up 30 million?
Yes.
yes,
Thank you. Wow, okay. So the property went up 30
Oh,
million.
right.
The car took out 20, so there's about
Yeah.
10 up. Okay, thank you. And because right now, I understand that numbers can change. Sorry, Dan.
Is that because of?
I should not talk to you. Sorry, Leah, I'm sorry. I meant to be talking, right, so right now, the budget going up is 3.3%. But the mill rate, if I calculate 15.6 over 15.2, that's about 2.7% mill rate, that's about 2.7% increase. And so is that different then because the grand list had gone up by 11 million, so we can ameliorate the mill rate going up a little bit relative to the actual budget going up?
So the 11 million equates to about $160,000 of new revenues. So budget's 1.7 million, subtract the 160, and then we calculate the mill rate from there.
I see, very, very good. So which is why the mill rate doesn't go up as much as the budget increase is going up. Perfect, understood. Thank you so much. That makes sense. Sorry, Carl.
What I was going to say is, at cost today, I said, there's so many bills being proposed right now and in the future. We should start when we testify, when all the first selectmen and mayors testify, or anybody else testifies, we should start with 5 bullet points saying, you know, the veterans tax exemption, the new valuation on vehicles, you're eating away at property tax revenue. And when you start giving more cookies away to everybody else, it just goes on the property tax. And we're in a tough spot in Connecticut with the property tax, in my opinion. We do well, we collect 99%, but I don't know where it goes. I don't know where the reform comes from. I don't know, there's a lot of towns where, just a two-bedroom ranch, you might be paying 8,000-9,000 in taxes. And I don't know how people afford it. I don't know where that goes in the future. I worry about that. So anyway, that's a little soapbox thing.
Good, we appreciate it. All right, other questions? That's all set. Eric or Megan, or either of you have questions at this point?
No
Good.
questions. I just wanted just a couple comments on things that were said. For the Harvey's Beach, the daily rates are 15 during the week and 25 on the weekends. So it is really, really low. And then I just wanted to comment on, from watching the last Board of Selectmen meeting, I really liked hearing the additions of the HR consulting funding, the amount we were able to give to the shoreline soup kitchens, and just the talk about maybe looking at what we contribute to the estuary, because that is, a big part of our town and is really well used. We give, I think, $45,000 to them. And it is a 9-town estuary, but some of the towns that are involved have their own senior centers, as you know, and Westbrook alone gives $100,000, I believe, to theirs.
Yeah, not everybody contributes to our estuary, and that's been a little point of contention, because the contributions to the estuary by the 9 towns are primarily for Meals on Wheels. And if you don't think Meals on Wheels goes into Westbrook, you're wrong. And so for Westbrook, for years has, I think, not contributed to the estuary, and they've tried to get them back on board. And one of the other points I made at the Board of Selectmen meeting was, I get to my office lots of requests from lots of nonprofits saying, hey, could we just get $500? Could we just get $1,000? Could we just get, because the Eddy Center in Middletown, the Literacy Foundation, there's an endless number of nonprofits that want money from municipalities, because nonprofits are hurting right now too, just like some of the towns are hurting. So, it can always be more, but we have to make sure that the responsibility is being shared. So I agree with you, Megan. They're all great. They're great causes, but I want to make sure that, I want to know what other towns are doing about that too, whether it's Shoreline Soup Kitchen or towns that really, the Meals on Wheels is critical to all the 9 towns. I've actually volunteered just a few days here and there with the Meals on Wheels. They go everywhere. And that's what that money is for. The amount of meals they deliver is just staggering. So anyway.
Okay,
Yeah, and the rides certainly for medical appointments, I'd be interested, and I know you're gonna follow up with Stan on some of those things, because those are really important. And there is some statewide data that, of what towns are contributing to their own senior centers, because a lot, have that as a pretty large line item in their budget. So I'm happy to share that, and I look forward to talking, hearing what Stan has to say.
Okay, we will move on. Thank you very much, Carl and Leanne, for putting the budget together. And I don't think we have any other budget discussion items. We'll go to selectmen's report. Are you all set or?
The land trust, Board of Selectmen basically agreed that, we should donate $10,000 from the open space fund to the land trust. We have a dedicated fund that, has gone through the process of Board of Selectmen, Board of Finance, town meeting. Years ago, there's about 230,000 in that fund. This would be utilizing $10,000 for the land trust to purchase. I want to say it's like they're buying it for like 250,000. It's a significant purchase.
It's like 13 acres.
Yeah, and it has a pond in the middle. There'd be parking for 6 cars.
Where's that located?
Over by the Old Saybrook Racket Club.
On the back.
It's actually owned right now by the Racket Club, yeah. So the land in the, I want to say like the southwest corner, maybe, connects to the Pointkowski property, which is the 100+ acres. So if that were ever developed, there'd probably be some open space requirements. So in theory, there might be able to be a connection all the way over to Route 154 from Springbrook Road. I just, is this board okay with the expenditure of that sum? Is there a consensus on that?
Yeah, I think generally people are good with it.
And, I've given you updates on a lot of this other stuff, so that's it.
Okay. No liaison reports, comments from board members. Any comments?
The only question I have is, kind of an ARPA thing, but what's going on with the 500,000 for the housing?
It sits available, and because we were able to make the moves that we made, it doesn't have a time frame against it for when it needs to be utilized, but it sits as an incentive to try to encourage housing developers to come to the town and work. So
It's not an ARPA. It's not an ARPA.
It's not an ARPA anymore.
No, it's off budget.
Okay, so did you hear about the project in Old Line? With housing?
Well, I might have.
The big project, it's right over, when you go over the bridge, take a left, right in the corner where Essex Savings Bank is. You know what I mean?
Yeah.
Oh, yeah.
Up in the back, there's a yellow house on the corner and the
This
land
is off
going
of
up.
Hall's Road you're talking about.
Yeah, they're
okay.
projecting, I think it's 1,360 apartments.
What?
Yes,
It's huge.
yes.
Did they
So
approve it?
it's not approved yet, no,
They're fighting it, I think.
well, they're gonna fight it, but again, you got that, housing, the 10%.
Well, 830G,
Yeah.
you can't stop it for the
Can't
most
stop
part.
it in a way.
So-
I just read something controversial.
So I just,
Is it really gonna be that many units?
yeah, I'll send you the
It's
email.
big for a small town.
We'll see if
They
that,
say
we'll
3,000 people.
see if that
That's
happens.
big.
That would be transformational, I would say, for
They don't
a
even have
line.
a train station or anything, like, all they have is the highway.
Well, it will affect Old Saybrook.
They'll all come right over the
Listen,
bridge and go to the train, get on the train.
I've said all along, the Westbrook project at the
That's perfect.
outlets, and that would be good for Old Saybrook.
It
I have
would.
no issues with it. More people, anyway.
Okay. Any other comments?
With regard to housing, Brad, one of the ideas in terms of spending that is the town will be soon opting in to this municipal redevelopment. What is it, authority at the state of Connecticut, and so we're gonna start working with them too, so. That funding might get used when we do that.
Okay, no comments from the chair. Any public comment? We still have intended. Janet is.
Hang in there.
Janet, anything you would like to join us with? Seeing none, we will continue. Okay, I will take a motion to adjourn.
So move.
Second, all in favor, say aye.
Aye.
Any opposed? Thank you very much.